New home sales are out for the month of January. They came in at 481,000 versus an estimate calling for 470,000. Joining me now to weigh in, Digital Risk co-founder Jeff Taylor and MDC Partners CEO Miles Nadal. Gentlemen, good to have you on the program. Thank you so much for joining us.
Pleasure.
Jeff, let me kick it off with you. It looks like the numbers for new home sales and the medium home sales are actually a little better than expected. This area has not gained traction, though, in a long time.
I think as we look at the broader home sales area right now, we saw obviously a very disappointing number for existing home sales a couple of days ago. New home sales are up a little bit, but I think we're still fighting two big issues. One, we haven't had the wage growth over the last 5 years that we've been expecting. From 2009 to 2014, median household income is still down. The second point is we still have a big demand mismatch. So you have the baby boomers who are looking to scale down from the suburban palaces and move into the cities. Okay, and then you have the millennials who are looking to potentially buy or rent, but they're also looking to buy into the city. So that inventory is very, very tight right now. So what I like is, I think with this incredibly low interest rate environment, even though new home sales aren't up dramatically, I still think that there's a great opportunity to buy a house.
I think people are also a little worried about the regulatory environment as it relates to housing, because over the last couple of years, it was very hard. The standards, obviously, and you wanted the standards to get better, had gone to a level where it actually shut people out of the market.
Well, that's a great point, though. I mean, right now, the loans that are being produced right now have the lowest delinquency rates in the last 5 years. And to your point, it's been a very, very tight credit box, but I think that we're going to start to see that expand over the next year and a half as interest rates start to actually increase a little bit and banks get more comfortable getting back into the home lending space.
Miles and Nadal.
Well, I think the issue has been everyone anticipated because interest rates were low, there would be much more demand for housing and be much more availability of credit because it would be more attractive. The practical reality is what I think what Jeff is implying is that there was actually very little credit available, that the banks were actually very restrictive in their lending practices. So even if rates go up even modestly, I don't think it's going to have a big impact on demand. The question will be the availability of mortgage finance for the average consumer.
From an advertising standpoint and business spending, what are you seeing? How does this all weigh into the overall economic story, Miles?
Well, I think the economy is quite stable. I mean, it is growing. It's just not growing robustly. I mean, I think we're anticipating 3% GDP kind of growth. The issue really is more, I think, the regulatory environment. The uncertainty of taxation, the uncertainty of the healthcare is probably weighing more on consumer attitudes of consumer confidence of spending. But things are good. I mean, you know, retail sales have been chugging along quite nicely. And I think the overall environment is quite good, growing nicely, but not at a robust pace.
I wonder if some areas of the market are good and almost too good. Let me turn to New York specifically to tell you what I mean, because Donald Trump called in yesterday. We chatted briefly. He was congratulating us for 1 year, but I asked him what he thought about the Manhattan real estate market and whether or not it was getting too expensive. Listen to Donald Trump yesterday.
I think there's a bubble. I think it's going to pop, and when it does, I'm going to be a big, fat, beautiful buyer.
So he basically says he's not going to buy anything right now, and it is going to pop. When it does, he's going to buy on the dip, but not until then.
Look, I have a different point of view. It is very robust, and prices are at an all-time high in New York City. The reality is there's huge institutional money that have come into the marketplace. There's long-term capital that believes that New York is just a unique opportunity. And unless there is a big macro issue that affects the overall economy in a dramatic way, I think New York real estate's pretty stable.
Yeah, and a lot of foreign money coming in, we should point out, Jeff.
I think you also have, like New York, again, is sort of an isolated city where I think it's a very good point. It is somewhat isolated, but you look at areas like Miami, San Francisco, Dallas, where the jobs are growing right now. I think those real estate markets are strong right now, are going to continue to be strong. Where I think we're going to see some weakness across the country, again, is more in the Midwest, where you have more of the suburban homes where that demand isn't there right now.
All right, we will leave it there. Jeff, good to have you on the program today.
Thank you.
Jeff Taylor, thank you for joining us. We'll see you soon, Miles.